Number one is this is what happens in bear markets. And what I mean by that is that, we saw the Terra Luna situation, we saw the UST collapse, anything that's not made to be on a firm foundation, ultimately in bear markets, it's shown to be faulty, right?
Today we have technical trader and analyst Gareth Soloway. Gareth is a chief market strategist at inthemoneystocks.com. Today he discusses Bitcoin price level forecasts and how a $20,000 Bitcoin price prediction could be coming up.
Right, so now we're seeing Celsius. I think they're not allowing withdrawals right now, which is sending shockwaves. I mean, that's the equivalent in the crypto space of in the financial system. If a bank said, hey, you can't withdraw your money, I mean, that is not a good thing. I mean, if this is an isolated Celsius incident, that's one thing. If it becomes something that many of these other crypto brokers have, then that's really, really bad. But I will tell you this. What we're seeing today in the price action is what I would consider blood in the crypto streets, which is just the same as blood in the Wall Street, kind of Wall Street period. This is where I start saying, okay, for a short-term bounce, it is starting to be likely. And again, it's scary, but you have to just kind of keep out the emotion and focus on the charts. And I'll show you here. Let me bring up the charts and take a look. And what you can see here is that there's this little interim support right over here at around 23,000 or so. And that's kind of what we've been dangling right on top of. So that's your short-term support on Bitcoin. I ultimately still am holding strong that I think at the high end of a target, you're talking about this 20,000 marker here. So I still think we're going there. But again, generally, you don't go straight to these levels. It's very rare to see a collapse from where we were, at 32,000 or 31,000 a few days ago or a week ago down to 20,000 that quickly. Usually you get to a level, you bounce a little bit, then you flush again. Ultimately, I still think that we could go as low as 12,000. 12,000 is this pivot going back to 2019. One of the reasons why I think you could go that low, there's actually a few. Number one is it's a measured move. So if you take this distance from this high to this low, which was basically a straight shot down, and then you do a measured move, that same distance from here, let me zoom out, from here, it takes you down to 12,000. This would be the same distance repeating, which again, in technical analysis, it's called a measured move. It's some of the symmetry of stocks and charts and crypto. And then the other thing to keep in mind is that 12,000 also is the 80 to 85 correction move, which is a standard kind of Bitcoin crypto winter, right? So again, 20,000 is my high end. That's where I start kind of accumulating a hodl position where I plan to hold it for a little bit longer. But what I'll do is I'll divide my ultimate max that I want to buy into about 5 portions. So let's just say for Pete's, for example's sake, it's $100,000. I would do 20,000 at 20,000. And then at maybe 17,000, another $20,000 worth, et cetera, all the way down. So again, there's lots of ways here. I'm still a long-term huge bull. This is kind of exactly what I was expecting. It's the .com flush out. You need to see 95% of cryptos honestly go away during this next 1 to 2 year period. It's why I've said so many times when I invest in cryptos, I generally only invest in the top 20 because the top 20 hopefully will still be around to tell the tale, just like Amazon back in the .coms. Obviously that one flourished afterwards, but I mean, it is nuts out there. There's no doubt about it. It is painfully nutty out there, and investors don't use leverage. I mean, that's just the bottom line. You use leverage in a bear market, you're going to get slaughtered. Notoriously, when I'm accumulating, like I did a little buying of Ethereum today, I put 4% additional in my portfolio of Ethereum. That's it. So I do have about a 20% position in my portfolio of Ethereum here for a bounce. Ethereum has broken down sharply, and really Ethereum is leading the drop. I mean, if you look at the relation to Bitcoin, Ethereum, this was your 2017 high, and it's already through that. All right, so here's your Ethereum chart. And again, you can see how it's leading Bitcoin. It's already taken out the 2017 highs right here. I think you have a couple levels coming up. The big one for me is going to be this $800 level right here. That's going to be a very, very big support. So again, basically below 1,000, I really start to think that there's good value here if you can say a cryptocurrency has value. No one thought it would go here. I mean, we were almost at $5,000. So at $1,000, you're basically down 80% on Ethereum, and we're getting awfully close to that, trading at 1225 right now. So yes, it's nasty, but again, if you're someone that has that long-term vision and you're not using leverage and you're trying to build a long-term accumulation portfolio, then you start to nibble. You start to nibble just a little bit, and you kind of say, okay, listen, I understand that these positions could go down 50%. That's just the crypto market, right? Even from here. But if you have that view of long term, then there's a lot more reward down the line on these good quality names. And I mean, you know, and I'm not going to compare what's going on with Celsius or UST necessarily to like a Bernie Madoff, but that's when when Bernie Madoff was discovered was when the bear market in 2008 began, right? Because he could no longer just fabricate the X amount of gains that he was on paper, because people were saying, oh my goodness, the markets are crashing, I need to pull money out. Well, guess what? Celsius is finding the same thing right now. They've stopped allowing that. So, I mean, really bear markets expose the weak hands or the fraudulent hands. And that's what you're starting to see. And it makes a lot of sense. I mean, the crypto market is probably one of the shadiest, unregulated markets out there. So in these type of environments, those bad areas are going to get exposed. You know, everyone wants it to be decentralized. No one wants these big institutions to control so much of it. But then when you get into bear market, everyone's like, oh my goodness, I hope the institutions come out and save the day. And it's like, well, in this environment, like you said, the institutions are not, this is beyond their risk tolerance, right? Yeah. They're already cutting back risks by selling Tesla and selling some of these tech stocks. They're not going to come in into something that's dropping by 20% a day and step in at these levels. Now, at some level, hedge funds who really do take risks like that, they will step in, but they wait for, you know, the absolute collapse. You know, they'll wait on Bitcoin to sub 20,000, probably even sub 15, like you're saying, before they step in. And I think this goes to the kind of the thesis of like, so I've been nibbling on Bitcoin down here, and I've been nibbling on Ethereum down here as we're getting to these kind of crazy sold short-term levels. You know, some of the things that I'm intrigued by is you have something called a time count here, which is 2, 4, 6, 7 straight down days in a row. If you look at charts, they tend to bounce after. If you get 7 red candles or 7 green candles in a row, you tend to get a short-term reversal in trend. It may only be short-term, but for me as a swing trader, that's an opportunity. But again, what I'm doing here is I'm not like betting the farm, right? And people are just so insane when they do this, especially in a bear market. When you're going counter trend to the market, you literally dip that toe in the water. You know, so you're talking about, you know, 4%, 2% of my portfolio, what I'm putting at risk initially, and then maybe I'll add another 2 or 4%. But you're not going like 10 times leverage in, praying and hoping that this is the bottom, because that's how you go broke in a bear market. And again, things have changed. Investors have to understand that the days of 2021 are now gone, because the Fed has said, sorry guys, we are not continuing to print money. And the government is in that same position. You know, you don't have enough people saying, okay, let's do this spending bill or this spending bill. And so all of a sudden the spigot's been cut off and the market's kind of left naked, if you will.
Subscribe to keep learning the truth.